Tomorrow is your birthday, Robert. You'll be 78 years old, and by now, you've built one of the most extraordinary legacies the world has ever seen. But what single thread runs through every triumph, every setback, every lesson you've learned? For me, it all starts with self-improvement. I grew up in Hawaii, surrounded by friends who spent their days surfing and growing marijuana. Not exactly the recipe for success. I knew that if I wanted discipline, I had to seek it out myself. So I wrote to my congressman, Medal of Honor recipient Daniel K. Inouye, and asked for a nomination to the U.S. Naval Academy. When I saw that Kings Point paid cadets 10 times more than Annapolis, I chose the bigger number, because even a rough diamond can shine brighter when it's polished. Graduating in 1969, I was earning more than $120,000 a year in today's dollars before I'd even turned 21. But money alone wasn't enough. The Marine Corps court-martialed me twice, once for missing a ship in Hong Kong, and again for flying guests in my helicopter with scuba gear and beer cans hidden away. Those were crushing moments, but in facing them, I learned the power of absolute honesty. I told the prosecutor everything, every mistake, every lie. 3 hours later, he looked at me and said, "You're free. Thank you for telling the truth." That day, I shed 50 pounds of stress and gained a lesson more valuable than any promotion. It's not just about discipline or duty. It's about looking yourself in the mirror and refusing to lie. Every time you own up to your failures, you lose the burden of deceit. It's what makes the difference between a life half-lived and one of unstoppable growth. You see, discipline lays the foundation, but without the right mentors, you'll build on sand. I've spent my life studying under true masters, accountants who still close real estate deals at midnight, engineers who designed skyscrapers while teaching calculus on weekends, entrepreneurs who've weathered 3 market crashes and still wake up eager to learn something new. Ask yourself, who are your teachers? Are they preaching theory from ivory towers or practicing success in the trenches? Too many people settle for the comfort of empty platitudes. When I travel the globe teaching my cash flow board game, I make sure every instructor has earned their stripes. Every lesson is battle-tested, every strategy proven. And here's the kicker. Knowledge without application is just noise. I remember sending my team a 3-hour lecture on behavioral economics, only to find half of them slept through it. So now, whenever I discover a nugget of wisdom, a TED Talk that changes how I think, a case study that redefines risk, I host a weekly workshop. We dissect it, debate it, and then turn it into a practical challenge. By Friday, they're living the lesson, not just talking about it. What if you applied that same rigor to your finances? Imagine treating every setback as data, every success as a hypothesis to refine. That's how you turn investing from a gamble into a science, and your portfolio into a powerhouse of compounding growth. What if I told you that over 60% of Americans have less than $1,000 saved for retirement? It's a shocking reality, but it shouldn't be your reality. I've seen executives in their 50s panic as the markets wobble, clutching spreadsheets full of what-ifs instead of action plans. They're paralyzed by fear of loss, when loss is simply data waiting to be analyzed. So here's the truth. Fear is your compass, not your jailer. Every time your heart races at the thought of the next market dip, lean in. Ask yourself, what exactly am I afraid will happen? Can I survive that worst-case scenario? Years ago, when the dot-com bubble burst, I watched portfolios evaporate overnight. Instead of raging at the screen, I mapped out every possible outcome, down 10%, down 50%, down 80%, and built plans for each. By the time the dust settled, most investors were scrambling to rebuild. I was calmly reallocating into undervalued opportunities. But theory doesn't stick unless you practice it. So here's a simple exercise. Tonight, grab your most recent account statement. Write down 3 fears you have about your money, big ones. Now, for each fear, write down the absolute worst financial scenario. Finally, Draft a one-sentence plan for how you'd respond. That's not wishful thinking. That's building muscle memory in crisis management. When you train your mind to treat setbacks as controlled experiments, you stop reacting and start executing. Investors who panic and sell at the bottom lock in losses. Investors who plan ahead, who say, all right, if stocks fall 40%, here's plan A. If they fall 60%, here's plan B. Turn volatility into a strategic advantage. So ask yourself now, are you letting fear dictate your future, or are you using it to sharpen your edge? Tomorrow, we'll dive into the power of leverage, how to use other people's time, money, and expertise to accelerate your path to wealth. Leverage is the silent winner's weapon. Imagine if you could multiply every dollar you invest by the talent, time, or capital of others, without risking your own balance sheet. That's exactly what I did when I launched my first real estate partnership. I contributed the deal flow and my track record, while other partners provided 80% of the equity and their operational teams to manage construction and tenants. Overnight, my returns went from 15% to over 40% annualized, simply by aligning with the right people. You don't need to be a tycoon to use leverage. You need to be resourceful. Look around your network. Who has money but lacks deals? Who has expertise but needs capital? Draft a 30-second proposal showing what you bring to the table and what you need, then ask for a quick call. You'll be amazed how often doors swing open when you offer a win-win. But here's the mid-video secret that shifts everything. In just a moment, I'll share the 3-word phrase I've used to negotiate multi-million-dollar acquisitions, even with seasoned veterans who had all the power. It's so simple you'll kick yourself for not thinking of it sooner, but it changes the game. Before I reveal it, ask yourself, what deal in your life could be transformed if you wielded leverage instead of going solo? 3 words, yet they've turned the toughest negotiators into eager buyers. Here's how it works. You present your proposal, an exclusive joint venture, a block of undervalued properties, a strategic partnership, and then you lean back, look them in the eye, and ask, what's the downside? Suddenly, the conversation shifts. They must articulate every objection on the spot, because if there is no downside, they see there's only upside. And if they do raise a concern, you've just uncovered the one obstacle standing between you and a deal. You can address it head-on or walk away cleanly. Either way, you're negotiating from strength. I used this tactic to acquire my first million-dollar development site. The seller hemmed and hawed about tenant risk, so I turned the question back on him. What's the downside? He realized there wasn't one. My capital partner shouldered the leases, my construction team guaranteed standards, and I managed the exit strategy. Within 2 weeks, the deal went from stalled to signed. Now, I want you to try it. Think of your next big ask, whether it's a client pitch, a co-founder offer, or a loan from a friend. Present it clearly, then pause and ask, what's the downside? Notice how fast the real barriers surface or disappear. Let me tell you about the single most powerful force in finance, compounding time. When I bought my first rental property, a modest duplex in San Diego, I didn't see a 5% yield. I saw 50 years of rent checks rolling in, reinvested year after year. By the time I sold, that small down payment had grown into a 7-figure windfall. That's not magic. It's simple math, multiplied by patience. Here's a quick exercise you can do right now. Take any dollar amount you could invest today, $1,000, $10,000, even $100. Plug it into a compound interest calculator at 8% annual growth. Now eyeball the 20-year figure. You'll see that every extra year counts exponentially more. Time is the asset no one can take away from you. But compounding only works if you set it in motion early. That means building 3 core habits. Automate your savings. Set up a direct transfer, no excuses, into an investment account the day you get paid. Out of sight, into growth. Reinvest every dividend. Instead of cashing out checks, let them buy more shares, properties, or businesses. Growth loves reinvestment. Review quarterly. Every 3 months, sit down for 30 minutes. Check your progress. Tweak allocations. Celebrate gains. Address shortfalls. I applied this routine religiously, even during turbulent markets. When 2008 hit and headlines screamed collapse, my portfolio dipped. But because I kept buying and reinvesting, my annualized return over the next decade surpassed 12%. Now pause and ask yourself, are you compounding your time, or is your money sitting idle? Tomorrow we'll explore how to protect your gains against inflation and taxation, because the best return is the one you actually keep. Inflation is the silent thief of your wealth, and taxation is its cunning accomplice. Even a 2% annual inflation rate can erode half your purchasing power in just 35 years. So here's how you lock down your real returns. First, own real assets. Real estate, commodities, and inflation-protected securities like TIPS rise with the cost of living. When I saw U.S. inflation tick above 5% in the early 2020s, I shifted 25% of my portfolio into indexed real estate funds and Treasury inflation-protected securities. The result? My net worth actually climbed in real terms, while cash under mattress lost value every hour. Second, harvest tax advantages. Max out retirement accounts, 401ks, IRAs, and their international equivalents. Use tax loss harvesting to offset gains. If one holding drops, sell to capture the loss and buy back a similar asset after 30 days. I do this every December with about 10 positions, trimming my taxable gains by up to 30%. Third, leverage corporate structures. If you own a small business or partnership, route your investments through it to benefit from lower entity-level tax rates and deductions for expenses. I incorporate family partnerships for real estate deals, reducing my effective tax rate by nearly 10 percentage points annually. Implement these steps by this Friday. Review your asset allocation. Identify one position to convert into a TIPS or real estate fund. Schedule a meeting with your accountant to set up tax loss harvesting, and explore forming a holding entity for future deals. Now, what if I told you that every market crash since 1929 followed the same three-stage pattern, and that by recognizing the final stage, you can spot bottoms before the crowd? In 1929, 2000, 2008, and today, markets peak, collapse, then rebound into a false recovery before the final trough. During the false recovery, most investors breathe a sigh of relief and get trapped again. But I've trained my team to watch for divergence in breadth indicators and credit spreads. When the S&P rallies above its 200-day moving average but fewer than 40% of stocks are hitting new highs, that's your warning signal. The final bottom is still ahead. In 2009, we spotted that exact setup and deployed 70% of our dry powder into beaten-down financials and cyclicals. Within 2 years, those positions tripled. The lesson? History isn't just a story, it's your playbook. Now that you've seen the forces at play, from compounding and leverage to inflation, taxes, and market cycles, it's time to assemble your own financial fortress. Here's a clear, 4-step blueprint you can start today. Clarify your vision. Write down your top 3 financial goals with exact dollar targets and dates. For example, accumulate $500,000 in my retirement account by December 31st, 2035, or generate $2,000 in monthly passive income within 5 years. Specificity turns dreams into plans. Build a diversified core. Allocate your capital across at least 5 uncorrelated buckets: equities, real estate, inflation-protected bonds, TIPS or equivalents, commodities or precious metals, and cash reserves. Use low-cost index funds or ETFs where possible to minimize fees and maximize tax efficiency. Automate relentlessly. Set up automatic transfers and reinvestment plans. Every paycheck should funnel a fixed percentage into each bucket. Dividends and rental income? They get swept right back into your highest growth allocation until you revisit your plan on a fixed schedule. Review, refine, repeat. Block out 1 hour every quarter. Pull your statements. Measure progress against your goals. If one bucket has surged past its target allocation, rebalance by selling high and buying low in the underweight areas. Celebrate each milestone, because motivation is fuel for consistency. Complete these 4 steps this week. By next Friday, draft your goals, set up your automation, verify your diversified allocations, and calendar your quarterly reviews. Ready for the finale, where I'll weave all these threads into an emotional close that will fire you up to take action and share the single phrase that will keep you accountable for the rest of your life. Think back to the moment you first decided you deserved more. A better life, true freedom, a legacy beyond your name. That spark of possibility is burning inside you right now. Every lesson we've covered today, from embracing discipline and honesty, to wielding leverage, to mastering fear, compounding, inflation defense, market cycles, and the 4-step blueprint, has one purpose: to empower you to seize that spark and turn it into a roaring fire. You are not defined by the markets, by your past mistakes, or by anyone else's expectations. You are defined by the actions you take moment by moment. When you automate your savings, you say, "I choose growth." When you negotiate with the 3 words, "What's the downside?" you say, "I choose confidence." When you reinvest every dividend, you say, "I choose abundance." And when you review your plan quarterly, you say, "I choose relentless progress." Here's the single phrase I want you to carry with you from this moment forward. My personal mantra that has kept me accountable for 5 decades. Action conquers fear. When uncertainty creeps in, repeat those 3 words. Let them steel your resolve and remind you that the toughest battles are won by those who simply refuse to stay still. This is your invitation to step into your own financial destiny. Don't let another day slip by on autopilot. Start today. Clarify your vision, build your core, automate your journey, review and refine, and above all, act. If you found this video valuable, hit the like button, subscribe for more strategies that can change your life, and share this with someone who needs the same spark. Thank you for watching, and until next time, keep taking action.